Are you buying or selling a home? Having a realtor can make buying or selling real estate much easier. HomeGain can recommend and connect you with a top real estate agent in your area. Call 866-512-7918 or visit HomeGain.com. Did you know, according to a HomeGain nationwide survey, that having a realtor working for you improves your chances by 50% of getting your home sold? HomeGain can recommend and connect you with the top real estate agent in your area. Call 866-512-7918 or visit HomeGain.com. Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
You're listening to Real Estate Radio Washington, D.C. Metro with local expert Ryan Sloper. Now, here's Ryan.
Welcome back, Washington, D.C. Metro, to Real Estate Radio. I'm your host, Ryan Sloper. Quick reminder, Real Estate Radio is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to me is 877-245-2030. That's 877-245-2030. Remember, that's the off-air line. You call that number, leave your name and number, and I will get back to you within the hour. I wanted to jump in. There was an interesting article in MSNBC. Actually, it was originally from Reuters. The rules for jumbo mortgages are set to change this year. And, I know this doesn't affect a majority of the people out there, but for those the people in the Washington, D.C. metropolitan area, and I know there's a lot because, housing is quite expensive within this area. If the Fannie Mae Freddie Mac limit in this area for the high, basically they raised the limits to increase them anyway up to $729,750. As of October 1, they're set to lower that amount to $625,500. Now, that's a pretty substantial jump down. I mean, $104,000 roughly, for people that are out there looking for $1 million mortgage are now going to have to put up another $100 and some thousand to get down to that conforming limit. So it is quite a big deal, especially, like Washington, D.C. and the surrounding areas, Falls Church, McLean, Reston. I mean, they're all high-dollar areas, and for people that are looking for those loans, it's probably going to be a very prudent move to go ahead and start looking, if you do plan on purchasing in one of those upper-tier, needing an upper-tier mortgage of over $729,750, to start shopping now, because come October 1, these larger specialty loans are going to basically be reduced down. I think that this is one of those things that's kind of flying under the radar right now, but I think that as we approach closer to that October 1 deadline, I think it's going to, get more and more press. If you're in that market right now and you're trying to figure out, what you'd have to put down payment wise and what credit scores and what income you would need, reach out to me. I'd be glad to give you a pre-approval. It's 877-245-2030. That's 877-245-2030. I know a lot of people with a low interest rate environment right now are trying to make that move up, meaning like to buy their dream home or the last home that they really plan on buying. So if, let's say, they were at, $500,000 or $600,000 house, they might be making that move to a $700, $800, $900 million house. And I think that now is kind of the perfect timing, just based upon where interest rates have been. I mean, we've been talking all show long and for the last couple months that, interest rates can't get much better than they currently are. And I know there have been little ticks down. We've gotten an eighth or a quarter better here and there, but you can't expect that to be the norm. There's just so much going on. Like I said, it only takes one or two things, and it can really shoot interest rates through the roof. I know that there's a lot of people out there that have been asking, well, is this really going to hinder the housing recovery, so to speak, by these loans going away? And I know FHA or government loans are still at that 729, which is basically for the higher income areas. But, there's been certain groups that think that private money is going to come back in, and there's actually going to be more loans that are made available to these upper echelon loans. I don't know if that's necessarily the case. I don't know. Obviously, they would have to hold the paper on those mortgages. They wouldn't be able to sell them off because Fannie and Freddie wouldn't be buying them at those higher limits. So, this could be, it's going to be interesting to see how this all plays out. I would definitely advise, though, people that are in the market right now and looking to buy over $729,000 to start looking now. I mean, literally, you could be talking about the difference in putting up an extra $100,000+ in down payment, which is absolutely huge. Give us a call, 877-245-2030. That's 877-245-2030. Now it's time to jump into our Ask Mr. Credit segment. And this is kind of a segment where we put together to help people out there that have some credit-related questions. They could be in the process of shopping for a mortgage right now and not qualifying because their credit scores didn't meet the criteria, or they're trying to figure out how to get your credit scores up higher. Just any issues that you could have in trying to apply for a mortgage or buy a home, and it deals with your credit. One of the questions that I had was actually from one of our listeners that said, I've just been discharged from a bankruptcy about 1 year ago, and this was from John Smith, and I want to know when a good time to start looking to purchase another home would be, or when should I start that process again? And John, that's a great question. I think a lot of people out there that go through bankruptcy are kind of, just think that just because of the bankruptcy, they have it and they go through that process, that they're not going to be able to buy again, or they're not going to be able to buy soon. That's just not the case. The FHA guidelines, which only requires a 3.5% down payment, and that down payment can be in the form of a gift from a family member or relative, you can buy as soon as 2 years from the bankruptcy discharge date, which that's not much time at all when you think about it. 2 years just flies by. And I highly recommend anybody that's going through a bankruptcy, that they start working on it immediately after that discharge. Because what happens is the underwriting guidelines state that you not only have to be removed 2 years from the discharge date of the bankruptcy, but you have to have reestablished credit and can't be late on anything from after that discharge date. So, John, I would say that you actually should, pick up the phone and call me now, because I think we can start working on this right now. We probably need to get you a couple of secured credit cards that you can actually start reestablishing your credit. Even though you've had a bankruptcy, I know you're probably thinking that, you're not going to be able to get a credit card from certain companies. And that may be true, because they're going to see that first and they're going to say, well, we're not going to give a credit. He has a bankruptcy. But you can go the secured credit card route, which there is banks out there. And if you can't get it done from yours, I can recommend a couple that I know will give one to you. You only need a couple $100. And by doing that, you can do one or two of those, and over the next 6 months to a year, you'll have that credit reestablished. You'll meet all the guidelines for an FHA mortgage. You'll be able to buy right at, that 2-year marker. So, if you're out there and you're in a similar situation as John and you've had a bankruptcy, I would recommend that you start working on that right now. Don't wait until 2 years down the line and then start trying to reestablish your credit. It should happen as soon as it happens. And then I think that, you're taking yourself from just a 2-year time period versus a 2 to 4 year period. 877-245-2030. That's 877-245-2030. We're talking all things credit. Another question was from Cindy, and Cindy had asked, I pulled my report, and the lender had told me that I needed a minimum of a 620 score, but I have a 618. What can I do to get my scores in line to be approved for the mortgage? Well, Cindy, without looking at your report, I really can't tell you, what exactly you need to do. If you can email me a copy of that, I can look at it and give you a better idea. But if you have credit cards, the first thing that I can tell you, because it accounts for about a third of your credit score, is your proportions of balances to high credit limits. So if you have a couple credit cards, and let's say it's a high limit of $500, you want to pay that balance down to, I'd say, about 30% of what your high credit limit is. So I would say if it's, it's $500 limit, you want to keep it at about 30% of that. It's about $150. So any credit cards that you have, that's the thing that you can tackle first. That will probably help jump up your score anywhere from 10 to 20 points. I would start there. If you have any collections, you probably want to negotiate to pay for deletion. A lot of people don't know that you can pay a collection or account off, and then it just closes. Well, when it closes, it actually hurts your credit score. It doesn't help it. It's going to re-report. But you can negotiate for a pay for deletion, which means that item actually gets knocked off your credit report permanently, in which case then that negative item is no longer derogatory because it's not showing it up at all. That would help boost your credit score. So I think, Cindy, those are two tips that you can implement right now that would definitely probably, I'm not guaranteeing it, but if you're at the 618, I would imagine it would bring you over the 620. If I can help you out, please give me a call or email me, 877-245-2030. That's 877-245-2030. You're listening to Real Estate Radio. We'll be back in just a sec.